There's a lot of analysts in the trade talking about the recent jump here in the corn market today, and it was after a little bit of a weaker overnight tone. Corn was up about 6 pennies last time we checked. Let's check now and see where it's at. We're up 6.5 on the December, 393.5, and so we're still pushing higher. Got as high as 395.5. So even though we're 6.5 higher, we've been as high as 8.5 higher in this market. July up 4.5 at 412 3/4. Over in the soybean market, now look at this. November up 7 1/4, 922.5. You go out to the May, well, even the March, the May and the July, they're all up over 8 pennies. And that enthusiasm seems to be bleeding over into the Chicago wheat market. December up 4 3/4, 494. July up 4. The December Kansas City wheat contract is up 5 1/4. The new crop July is up 3 3/4. It's at 440 3/4. Brian Hoops joins us now with Midwest Marketing. Well, what do you think of this? What are you hearing? The recent, all of a sudden, it started with the corn, Brian, and now we're seeing these gains go all the way through the entire complex.
Yeah, good morning, John. I'd like to talk on these days when we're seeing higher markets. Certainly much more exciting than if we're seeing lower prices. But, basis levels and firming up a lot. I think a lot of this has to do with some end users starting to be concerned about what is going to happen with this crop in parts of the Dakotas where we're going to get a heavy amount of snow, rain, and effective end to the growing season for corn, soybeans. Spring wheat belt is certainly going to be impacted as well. And we're seeing quite a bit of volume picking up here in this market. Now some of the speculative community starting to come in today as well and add to these gains. If you're a chart technician, there's like a little pennant or a triangle formation on the corn market, and we broke above that this morning, and that gave us some strength here, seeing us have a pretty sharp rally. And like you said, started with the corn, it's spilling over to soybeans, soybean meal, wheat, all getting in the act. It looks like Thursday's report should be friendly as well, with some cuts in corn, soybean yields. We know the quarterly stocks numbers that came out at the end of September will be factored into the ending stocks numbers or the carry-in numbers for this report, and that, of course, will be a little bit friendly as well, with ending stocks for soybeans to start off about 90 million bushels less than the month ago, and corn should see a reduction of over 300 million, and then we start putting production numbers into place. We have a lot of moving parts on Thursday morning.
Brian, if we weren't such good friends, I wouldn't put you on the spot like this, but how much of this gain here do you think has to do with the weather?
I think a big portion of it is the weather. That it's going to end the growing season in the Dakotas and Minnesota, parts of Michigan and Wisconsin. These crops are very immature, planted very late, and the yields are going to be down considerably. So, I think you're going to see some real movement. We're already starting to see movement in the basis levels as some of these end users are starting to make plans that they are going to have to either import some corn or tighten basis levels up to get that corn supply that they need for contracted for feed usage or ethanol, whatever use that they have. So there's going to be some opportunities here, but most of this I think is weather related.
Has anybody been talking about freight rates with these prices doing what they are right now and trying to move some of this grain around a little bit logistically?
Yeah, we haven't heard much talk about that, but that'll be something that'll come into play as well. River levels, and it will be something that'll be talked about in addition to that. But, we have an office in South Dakota, southeast South Dakota. They're talking about basis levels narrowing up over 20 cents already just in a week's time.
That's quite a dramatic movement. Tell you what, Brian, we'll be back in just a moment. Stay with us. We'll be talking about the livestock next here on the Marketing Report. All right, let's go to the live cattle market, and then we'll get comments here to kind of get an idea of what's going on behind the scenes. And we just talked about some of those higher input costs. Well, October fats are up 8 at 108.33. December's down 48, but the February up 30 and the April up 15. A mixed to mostly stronger market. For the feeder cattle, well, even though corn is taking off here just a little bit, the feeder cattle market's still kind of mixed. With the November down 5, the January up 5, the March down 35. And Brian, let's stop here before we get on to the hogs. Would you have looked for maybe even a little more of a movement over here in the feeder cattle market because we're seeing such the strength in the corn market?
Yeah, that would make sense that you would see some weakness in the feeder cattle market when you have a big breakout like this in the corn, and that may be coming yet. I certainly would expect that if corn prices continue to work higher, some of this demand for the feeder calves will start to soften up. We've at a rally point here in the feeder cattle market that has extended weekly gains up into the 143 area, and we're backing off from that. So this may be top end of this feeder cattle market for now, at least against the November contract.
Well, what about the lows in both the fats and the feeders? Do you think that's well behind us now, and that maybe we're to that point where we're getting on more firm ground now that the Tyson deal has kind of settled down here a little bit? We're going to start taking some of the weights off with some of these colder temperatures and winter weather. And now that we've got the trade deal with Japan, those are all things that lean toward a probably more firm market.
Yeah, overall, the market should be on really strong foundation in here. I think we are going to continue to see prices work higher. The October contracts come about $15 off of its lows that were charted. Most of that strength has come in the cash markets. Now, we are overbought and certainly could see a pullback. Show list numbers this week much larger than a week ago, but they were kind of the same thing a week at this time last week when we were talking about lower cash trade prospects because of the bigger show list numbers, and it turned out we ended up with higher cash trade by the end of the week. So the futures market, may pull back in here, but I got to believe that there's going to be more speculative buying on any setbacks that we see in the market.
All right, Brian, good, all good points. Thank you very much. Brian Hoops with Midwest Market Solutions here. On to the hog complex. This has been an interesting story. We closed limit lower yesterday. Today, December hogs up 308 at 67.33. February up 210 at 73.85. Janet, all of those contracts are higher, and we are trading an expanded limit, so $4.50 will be our daily limit we can move today.
All right. Thank you very much, as always, John.
Yes, ma'am.